Hi everyone, welcome to another episode of 3 Minutes to Fin It by One Tree Hill. With the debt markets in the turmoil that we are seeing, it is important to take a few steps back and actually simplify debt investing. While returns are simple to understand in terms of coupon on a bond or an NCD, there are primarily 4 types of risk that each debt mutual fund is subject to: credit, interest rates, liquidity, and the AMC itself. Credit as such is a simple concept in that poorer the credit, higher the interest rate. Intuitively, you would obviously demand a higher interest rate from a local small real estate player than maybe from a global bank. In fact, the common misconception on debt paper is that the primary risk comes from regular interest rate payments. But more often than not, most of your risk is actually on maturity. When we move on to the risk from interest rates, the concept of duration becomes very important. And a simple back of the envelope calculation is to think of the duration as the quantum with which a bond price would move for every 1% move in your GSEC, but in the opposite direction. So if you had a bond with a duration of 6.5 and interest rates increased by 1%, your bond price would actually drop by 6.5%. Liquidity risk is actually twofold. The underlying of the bond can suddenly become illiquid. Think DHFL, INFS, Z, Vodafone, etc., which is okay, but come redemptions, and if these AMCs are forced to sell these, they might have to sell it at less than fair value, which will adversely affect your mutual fund NAV. However, debt funds do obviously keep AAA cash, and there is a line open to meet significant redemptions. Moving on to the asset management risk is something we have not experienced still. He who must not be named did what must not be done. Historically, there have been times when redemption subscriptions can be stopped for a limited period of time. But what we've seen recently has been quite unprecedented. As a tweet I read, the number of unprecedented events in the last 2 months itself has been unprecedented. That's it from us. Coming up next, how do you pick a debt fund? Don't forget to subscribe.